People may be returning to the market right now. Are there enough investors ready to jump back in to end this two-day slide? And also, what can we expect today? Todd Horwitz of Bubba Trading is with us. And in London, I've got Craig Erlam of Oanda. It's great to have you both here.
Good morning.
All right, Craig.
Good to be here.
Craig, let me start with you. U.S. futures are higher, but the news from overseas and coming out of the U.S. is that we may have this meeting at the G20 at the end of November between President Trump and President Xi Jinping of China. That seemed to lift Asian markets. That seemed to give Europe a boost along with technology. What's the story from your perspective in London?
I mean, I think any dialogue between the US and China is going to be welcome. I think there's quite clear that that's been a major headwind for the markets, and it's something that's contributed to the declines this week. Whether we expect anything to come from that's another thing, but anything really that takes some of the heat away from the markets from the past couple of days is naturally going to be seen as a good thing. So far, markets have only gained marginally in comparison to the declines, though, so we need to be a little bit careful when reading too much into today's moves.
Right. And again, it's how we close, not how we open, so we always remind our viewers of that. But at the same time, Todd, if you look at what happened in the intraday with the Dow yesterday, there was this 15-minute piece of the market. It was 2:30 to 2:45 Eastern time, where you had a 400-point drop. And a lot of that seemed to be one big sell order. You know, the average investor always kind of wonders, am I really left out of this market? Is it all about traders and fund managers and hedge funds? What do you say to that person, Todd, that's watching and gets a little nervous?
I think that what you really need to do, Cheryl, is if you're an investor, which most of the people watching here are investors, is they need to not worry about these blips that happen. You know, you get big sell orders in thin markets that are extremely volatile, and the markets are going to move. I mean, the markets haven't changed. I've been doing this for 39 years as a floor trader, and markets haven't changed. I mean, computers or no computers, they move fast, and when people don't want to get in the way and you're in a wild market, you're going to see these big drops, and you're going to see these big rallies. I mean, overnight, at one point tonight, we were up over 300 points in the Dow. So you're going to see a lot of this wild swinging volatility. I think it's best as an investor to close your eyes and not worry about it, because, again, the markets will find their equilibrium again. But we're going to have some real volatility the next couple of weeks with these earnings coming out, because what's going to happen is I think they're going to guide lower, and I do think we're going to see some more selling pressure, and I wouldn't be surprised if we ended up lower today.
So, we were looking at the VIX, the fear gauge, we call it here at Fox Business, Craig, and that definitely showed that we might have some, you know, it has been at new highs this week, and the volatility is coming back. But at the same time, you know, Craig, we had a nice decomposite volume yesterday, 11.3 billion shares. That is a very high level of volume. That shows that the selling was actually real, Craig, yesterday. There was real money versus a low volume day when you've got volatility. You had high volume and volatility, Craig.
Absolutely. I think that's a very important point. Days of higher volumes when we do see these moves does suggest that there's more substance to the moves than days of low volume, where you see spikes in volatility as an alternative. And I think it just relates to the fact that there is a lot of underlying risk in the markets right now. Investors are nervous, and we went through a couple of days when it looked as though we were going to really pull through this earlier in the week and then towards the back end of last week, and it seems that we just hit that point at which investors decided it was a little bit too much, and then we saw that flood for the exits. And I think it's just part of what we need to become used to in this environment right now. Right.
Well, what we've gotten used to, Todd, and you mentioned this earlier, electronic trading, but I think there's actually human beings that are pushing some of these buttons. If you look at kind of the trend that we're seeing now, whether it's these managed ETFs or these hedge funds, a lot, especially the ETF managers, it seems like they're waiting till the end of the trading day to make their moves, because they still have to track the index that they're being paid to track, whether it's the S&P or the transports, take your pick, even MSCI. So, Todd, that tells me that this, again, the selling is real, and that we may have this end of trading day push that we're going to have to get used to as the new normal.
I think that's a great point, Cheryl. And I think the other thing we have to look at here is that, you know, people get margin calls, and we know that margin debt is at record highs right now. So not only do you have the fund managers trying to push the buttons late in the day, but the margin calls start coming in between 2:30 and 4 as well. So you start to see that late day push down, usually because margin comes in, which creates more volume, which creates the deeper sell-off, because we start to trigger some some numbers that make the markets go down even farther. And that's always been a problem for years, is that when you get too much margin and people are forced out, when you get these wild moves, you see a heavy volume at the end, add in the ETF fund managers, and it makes for a wild party towards the end of the day.
A wild party, that is certainly one way to look at it. I like the positivity. Todd Horwitz, Craig Erlam. Guys, thank you very much for that trader perspective. It always is very helpful, I think, for our viewers to hear from you. Guys, thank you.